Hey everyone, in today's video, I'm going to answer the number one question that people ask me about Social Security. What's the right age to file? Now let me give you a warning. This answer is not simple or straightforward. I suppose if it was, people wouldn't ask me for my opinion. But today I wanted to simplify the answer so you could figure out exactly what you should do. But before we jump in, be sure to subscribe and hit that notifications bell if you haven't already. As I am recording this, I have developers working on new tools that'll help you take some of the mystery out of the filing decision. And when those tools are released, I'll make a video to walk you through how to use those. So the decision about when to file is not a decision that should be made in haste. Ultimately, when you should file for Social Security is a highly personal decision that depends on a lot of individual factors that's unique to your situation. Now, over the last 10 years with helping a lot of people with Social Security, I've come to identify 9 factors that you need to consider when you're thinking about filing for your Social Security. So although this is not an easy decision or one that you should take lightly, after you've gone through this video, you'll be much more informed about choosing the right age. So let's jump right in. Now, a lot of people who work in finance, that's my industry, they take a very hard stance on the best age to file. More often than not, they'll say that it's best to delay your Social Security as long as you possibly can. But then on the other side, you have individuals like the hundreds of YouTube comments that I've gotten that say you need to get it as quickly as you can. Well, the truth is probably somewhere in the middle because neither of those extremes are always correct. The decision about when to file is highly personal, and it has to be made considering multiple individual factors. Whatever you do, don't let the simplicity of the Social Security statement fool you. If you care about your retirement, this decision has to be made with careful thought and analysis. Now, my goal in this video is not to tell you that a certain age is best and another age is a horrible or stupid idea. I simply want to give you some things to think about as you're walking through the logic and making this very important decision for yourself. In the first part, I'll give you some context, and then in the second part, we'll jump into those 9 individual factors. You know, the entire when should you file argument is centered around your full retirement age. Should you file early and get a reduced benefit? Should you wait until your full retirement age and get your full benefit? Or should you file after your full retirement age and get an increased benefit? Since this seems to be a central issue, let's take a quick refresher on full retirement ages since they're not the same for everyone. And then we'll take a quick look at how the reductions or increases work based around your full retirement age. The first thing you have to know is that when you attain Social Security's full retirement age, you will get 100% of your benefit. But you need to know when that is, and thankfully it's pretty simple. For those born between 1943 and 1954, it's age 66. For years of birth 1955 to 1959, you simply add 2 months for every year after 1954. And then for birth year 1960 or later, just use a full retirement age of 67. And this age is important because this is where you receive the full Social Security benefit. Now, during this video, I'm going to assume that you were born in 1960 or later and your full retirement age is 67. But if it's something different than that, slightly younger, it's not going to matter all that much. So how is your benefit adjusted based on filing age? Well, if you file after your full retirement age, your benefit will be increased up to 124%, which is 8% per year. Now that stops at age 70, that 8% does. That's why it goes from 100% to 124%. If you file early, it's going to be reduced by about 6% per year. So just so this is really clear, let's put it in dollars. If your full retirement age benefit is $2,000, it'll increase up to $2,480 at age 70. If you file before full retirement age, it can be reduced down to as little as $1,400. And now I'm not including cost of living adjustments here, so that's roughly between 62 and 70, $1,000 difference per month. And it's easy to see why the financial community likes to make these big, broad blanket statements suggesting that everyone should delay as long as possible. But despite the overwhelming software tools and online content that suggests just about everyone should wait, that's not what people are doing. The filing data put out by the Social Security Administration shows that 1/3 are filing at the earliest age possible. So, does this mean that most people are making some really bad decisions? Well, I don't know. I do think this decision is often made with a lack of thoughtful analysis, but I think it's short-sighted to broadly say that filing early is just wrong. One thing I know for sure is that there are a lack of resources to help individuals work through this important decision. One of the reasons we've had the initiative to create some of the software tools that we hope are going to be coming out in the near future. And not having these tools leaves individuals to make the most intuitive choice in front of them, and that's generally centered around this concept of a break-even analysis. Now, these type of calculators, these charts that used to be out there pretty often, you would see them online, they tell you how long you'd have to live for benefit payments to catch up with other filing ages. For example, you'd compare filing at age 62 versus 67, and the break-even calculator would tell you that you'd have to live somewhere around 78 years of age for it to catch up or break even. So if you died before 78, you would have been better off to have filed at 62. So let me just add a little note here. I used to hate these calculators, but I have moderated my opinion on those. In fact, our developer is in the process now of creating a break-even calculator that is going to tell you your break-even age down to the month and include inflation. These calculators have their place, but the reason I used to dislike them so much is that they were used inappropriately. Some folks base their own life expectancy on the experiences of their family members, coworkers, or friends, those people that's in the circle around them. So when they went and used one of these break-even calculators and it said that they had to live to 78 or even an older age, they decided, there's no way that I'll ever live to that break-even age, so they would just file early. And I do think that that is a mistake. The question the break-even analysis answers is, what if I die early? And that's a very small part of the filing decision. It only considers your benefit amount, right, based on your work history. And it completely ignores the optimization of spousal and survivor benefit and the role your benefit could play in their lifetime benefits that they receive. So whether you're making this decision for yourself or you're helping someone else make theirs, you cannot use the break-even thinking on its own. You have to consider the 9 individual factors that we're talking about today. All of these factors are very important, but listen, the last 2 can have disastrous consequences if you ignore them. So let's go through each of these factors one by one, and I hope this gives you some food for thought. The first factor is simply your gender. The decision to delay or not to delay is more important for women than it is for men. And there's 2 reasons for this. Number 1, women live longer than men. And 2, on average, Social Security makes up a greater percentage of a woman's retirement income. So the decision to file later and get higher benefits is possibly more important for a woman to consider because of how important the benefit will be in your retirement. Now, if you're a man, it's likely that your benefit is going to be higher than your wife's benefit. This means that you need to exercise caution based on the impact that your benefit will have to your wife, since she's likely going to outlive you and need the income worse than you do when you were both living. Now, I'll dig deeper into that in just a little bit when we talk about some spousal considerations, but before I get stoned to death in the comment sections for being sexist, all of that data is directly from the Social Security Administration, and I think data matters. So we can be politically correct all day long, but we need to get down and talk about some of the factual data. Then the second thing is you need to consider your marital history. If you've had prior marriages, you need to figure out if you're eligible for benefits from any of those past marriages that could boost your own benefit. For example, if you have an eligible deceased spouse or ex-spouse, it could make sense to file for a survivor's benefit as early as age 60. And then you could switch to your own benefit later, and you could wait up until 70 if it made sense to do that. Now, if you still have an ex-spouse who's living, you need to figure out, are you entitled to a higher benefit from the spousal provision from their work history? Now, I'm going to link up a lot of resources in the description so you can continue your research on spousal benefits, survivor benefits, and a lot of other stuff. So check those out for more information that'll help build some more context around your marital history and this filing decision in general. So factor number 3, do you have minor or disabled children at home? If so, they could be eligible for benefits once you file for your own benefit. Grandchildren can be eligible as well if both biological parents are deceased or disabled, or if you have adopted them. This is one of those cases where it generally makes sense to file as early as possible, and that's simply because there's a rule that says before benefits can be paid to anyone off of your work history, you have to be receiving benefits. And when you look at the combined benefits to your children and your benefits, and maybe even an eligible spouse, it can be up to 180% of your full retirement age benefit. So if you have children at home that meet the criteria, there's an obvious reason to strongly consider filing early. And then we have factor number 4. Are you disabled? Look, if you're disabled or you even think you may meet the criteria for filing for Social Security disability, doing that at age 62 versus filing for retirement benefits at age 62 could make a lot of sense. And this is because your disability payment is the same as your full retirement age payment. I've seen more than one individual who clearly met the criteria for disability benefits, but they were waiting until their full retirement age for their retirement benefit to get to the maximum amount. And that was just a bad mistake. So if you're eligible for disability, you probably ought to consider filing for disability. The 5th factor is somewhat related, but it's different enough to have its own category, and it's your health. If you have a condition that could lead to a shortened life expectancy, that should be part of your decision process, and it may be a little deeper than you're thinking. If you're single, it could mean that you file for benefits as early as possible in order to get all of the payments you can. This is one time where the break-even chart really could make a lot of sense. But if you're married, you'll have to balance the impact of leaving your spouse a smaller benefit if you file early or a larger benefit if you file later. And that was part of the reason that I recommended to my own mom that she should file early, was her personal health. And I think some of that will start to make more sense as we move into the 6th factor, which is spousal considerations. Now, this is the age, health, and individual benefit of your spouse, and these may be separate factors, but they are so interwoven that I'll cover them all at one time here. First, let's assume that your spouse is the lower earner. So if your spouse is younger than you, they're probably going to outlive you. If your spouse is also the lower earner, this means that your retirement benefit will likely become their survivor benefit when you die. And for that reason, it's important to consider how your filing decision will eventually affect the survivor benefit that your surviving spouse is going to receive. Now, we briefly mentioned that in factor number 1. But in this case, delaying your benefit would increase the survivor benefit they receive for all those extra years after you've died. But if your spouse is in poor health and unlikely to outlive you, delaying your benefits strictly for the purpose of increasing their survivor benefits just doesn't make a lot of sense. And like all those scenarios, that one is highly dependent on the math and a lot of other factors too. So let's hit some spousal benefit stuff real quick. If your spouse is the lower earner, be aware that their benefit may not get to the maximum benefit they're eligible to receive until the spousal benefit portion kicks in. So if your spouse's benefit is less than 1/2 of yours, keep in mind, it could make sense to file just to open up your work record to pay a spousal benefit. So for example, if your benefit is $2,000 and your spouse's benefit from their work is $400, they'd be entitled to their $400 first, and then up to a $600 spousal benefit for a total of $1,000 at their full retirement age. But the catch is, you have to file for benefits first for that extra $600 to be paid. And furthermore, you have to remember that a spousal benefit does not increase beyond full retirement age. So if your lower earning spouse is older than you, by waiting to file, you may be increasing your benefit, but all of those months that go by while you are waiting on your payments are payments that your spouse is not receiving. This certainly holds true if you have a spouse with no benefit of their own. Because again, that spousal benefit portion can't be paid until you file. And by delaying your benefit, you are also delaying a higher benefit for your spouse. Now, if your spouse is the higher earner, their benefit will be more than yours. There's nothing you can do in your filing strategy to increase their current benefits or future survivor benefits. At that point, you should consider your own life expectancy and the last couple of factors that we'll discuss. But one exception to this may be if your spouse is the higher earner and in poor health, especially with a condition that has a high likelihood of ending in premature death. You may want to consider filing early because once your spouse dies, your own benefit is going to stop and you're going to start to collect your deceased spouse's benefit. So there would really be no benefit in having delayed your own payments when you won't be receiving it, but for a very short period potentially. Factor number 7 is your other income and assets. If you have ample assets and other income sources, the relative importance of a filing decision is not the same as it is with someone that has very little in assets or other income. You see this coming right out of the Social Security statistics. For Americans, the average Social Security benefit is 38% of retirement income. Now, that's a pretty high percentage, but this number includes those who have so much income they probably don't even notice the Social Security deposits when they're being put in their bank account. But it also includes those who depend on Social Security for 100% of their retirement income. So if you have assets, you're going to have more options in your filing decisions. And if you have income coming in, you're going to have more options as well. So income and assets buys you the freedom to be more flexible. And that leads us right into factor number 8, which is your tax scenario. Somewhere between 0 and 85% of your Social Security benefits are going to be added to your taxable income. It could make sense to delay filing for the express purpose of reducing these taxes. Now, it's not going to work for everyone, but for those in the right income bracket, it could make a big difference. So, as a refresher, to determine how much of your benefit is taxable, you have to use this number called your combined income. It's just a measurement of income that's used specifically for the purpose of determining how much of your Social Security should be included as taxable income. Now, your combined income is roughly calculated as total income from taxable sources plus your tax-free interest plus 1/2 of your Social Security benefit. So let's assume for a moment that the total income you're going to need in retirement is $4,000 and that you and your spouse together have a collective Social Security benefit of $2,000. This means that you're still going to need $2,000 from other sources, such as your retirement accounts. So what if you took the entire $4,000 you needed from your retirement accounts until you reach age 70? Now again, it depends on your balance and a number of other factors, but then you could switch on your Social Security benefit, which would be higher for delaying. In this case, if it was $2,000, it would be $2,480. Now you would only need $1,620 in monthly distributions from your retirement accounts. And since only half of your Social Security benefit is counted in the provisional income or combined income calculation, the overall combined income number is going to be reduced. And that results in less of your benefits being pushed through the brackets and potentially being taxed. Now, with all of that being said, your tax advisor is the best resource for recommendations on a tax plan for retirement and Social Security. So be sure to talk to them and walk through the specifics of your situation before you make a filing decision based strictly on tax benefits. And then we have factor number 9, your employment status. You know, the lure of being eligible for benefits at 62 is very strong. And that's why I think we see so many people filing then. That's the first age that you can get checks. But if you plan to continue working, you need to be aware that the Social Security income limit may affect you. I've seen more than one individual who filed for benefits without being aware of this income limit and later got caught up with a nasty overpayment notice. And you do not want to get caught with an overpayment because those are nearly impossible to unravel. I don't want to cover all the details of the earnings limit here, but just know that except for a narrow band of time, the maximum amount you can have in wages or net earnings from self-employment is $18,240, and that's for 2020. It tends to go up every year. Now, this earnings limit only applies if you are under full retirement age, which we covered a little while ago. At your full retirement age, that income limit does not apply. But in this complex conversation on Social Security and choosing the right age to file for benefits, one thing is very clear. There is no one-size-fits-all answer. There's no rules of thumb. Don't let anyone tell you that when it comes to filing for Social Security. Not even this video considered all of the factors that you need to consider in order to make a really good decision. But I do hope that it gave you some great food for thought, and I'd encourage you to keep digging in and learning about how your filing strategy is going to impact your total retirement. So before we wind this up, let me take just a moment and review the 9 factors that you need to consider. First, we have your gender, then your marital history, and then do you have minor or disabled children? What about your own disability, your other health considerations, all the spousal considerations, your other assets and income, your tax scenario, and finally, your employment status. Once you put all these factors in the decision processor we call our brain, you should have a much better idea of what is the right age to file. Thank you so much for watching.